Hi, everybody. Welcome to SpringPath's College and Career Readiness Success Tracks. I'm Elisa Ocone, Director of Outreach, and today we are talking about financial planning in Success Track 3, Episode 4. So the topics that we'll cover today are types and sources of financial aid, federal loans, private loans, and college tuition payment plans. So before digging into the specific slides, just a couple of things overarching that I'd like to mention or point out. And one is really just a personal opinion of mine. And I know there are different schools of thought with this, but for me, I, both with my own sons and in kind of counseling and working with other high school students, have found it beneficial to not let sticker price get in the way of deciding where someone will apply to. It is common for someone to say, I'm not going to bother applying to XYZ institution because the sticker price all in is $80,000. And while I understand where that is coming from, because that is out of reach for most people, I will say that you really never know what your financial aid award or package will look like when all is said and done. And perhaps the college with a super high sticker price might come in with an out of pocket or what you will end up having to pay out of pocket may be far less than an institution with a lower sticker price to begin with. So again, just from personal experience and having talked to many people, some of whom may have missed out on some really great opportunities in terms of financial aid and scholarships and grants, it will really come down to once you have received your acceptances from colleges and those financial aid awards and packages that you compare the out of pocket expense and then see the right fit for you and your family. So that just wanted to put that out there from personal experience. And in terms of timeline and when you'll start to make those decisions, typically late March, early April, if you've applied regular decision, and then knowing that for most schools, there's that May 1st deadline for enrollment deposits. It doesn't give too much time. Of course, you'll find out earlier if you've applied perhaps rolling admissions or early action. Again, this year's a little bit different. If you watched the last episode in track 3 about the FAFSA, with FAFSA opening or becoming available to fill out later this year in December, that may push back some of those financial aid awards, but just stay tuned for all of that. Good information and knowing some of this upfront, I think will help when it comes time to make those decisions overall. And I really do think that a spreadsheet is helpful. I've mentioned it before in terms of, having a spreadsheet for applicant portal login information when you submit those applications, but also having one for financial aid so that for each school that you've applied to, when those financial aid packages come in, you have a column for grants versus federal loans versus merit scholarships if the school you're applying to has merit scholarships available. So I think tracking things that way will then make it very easy if you have a column in there for out of pocket expense to know if you were to choose any of those, let's say 5 or 10 institutions to which you applied, you will know what you would have to pay out of pocket. And that makes for a much easier comparison. So just wanted to put that out there before we dig into types and sources and all of that good stuff. So just kind of be prepared to review and compare as you go through the process. So let's talk about types of financial aid first. And these first two on top, grants and scholarships, these are typically those areas that don't need to be paid back. So whether it is an institutional grant or a merit scholarship or an outside scholarship, that's essentially your free money, money that doesn't have to be paid back. Federal work study is now paid directly to the student. So it's a source of kind of guaranteed, or it is, I should say, if you qualify for federal work study, you are guaranteed the opportunity to have a part-time on-campus job. The easy thing with that is that it is easy when you are on campus to work and kind of navigate that with your class schedule and other activities. The downside, according to some students, is there is a cap on the number of hours that you can work because there's a total monetary amount that you can't exceed. But again, for everyone to figure out if you do qualify for federal work study. Again, something to think about. And then, of course, those loans, be it those federal student loans or private loans. We will talk about both, but those are generally the four sources of financial aid. All right, so where does it all come from? So institutional aid will be funded by the college itself. And again, you'll see when you start to get financial aid award packages, an itemized list of what all of these monies correlate to and what they are, what category they fall into. And they might call them a little something different, but you'll be able to kind of look at everything and compare when the time comes. And of course, there is state aid, which is funded by the state where you live, and then federal aid funded by the Department of Education. So those are the different sources for where those types of financial aid come from. So let's talk first about subsidized federal loans. So there will be subsidized and unsubsidized federal loans. So subsidized federal loans are need-based. There is a fixed interest rate from the Department of Education, and the Department of Education pays the interest while the student is enrolled at least half time during the grace period and during any approved deferment periods. And those federal loans don't have to be repaid until the student graduates, and that is including interest. Then we have those unsubsidized federal loans, which are not need-based, but there is that fixed interest rate from the Department of Education, but the student is responsible for interest that accrues. And again, those federal loans don't have to be repaid until the student graduates, including interest. Then another kind of piece of that federal puzzle is the Direct Plus loan or the Parent Plus loan, so often referred to as a Parent Plus loan. So the requirements for that are that that person be the biological or adoptive parent, or in some cases, step parent of a dependent undergraduate student enrolled at least half time at an eligible school. That individual does not have an adverse credit history unless you meet certain additional requirements. And again, if this is something that you pursue, you'll dig in and read all of the fine print. You must meet the general eligibility requirements for federal student aid. So again, going through that FAFSA process. And then if you don't request a deferment, you'll be expected to begin making payments after that loan is fully dispersed. All right, so moving on to private loans, separate from what students qualify for with that FAFSA and going through the FAFSA process. Private loans are generally secured through a bank, a credit union, or some online entity. I'm sure you hear ads all the time or see television commercials all the time for student loans. There's a whole lot out there that you can research and compare to find the best interest rate. Because they are credit-based, and typically students don't really have credit to secure them on their own, students often need a cosigner who can meet the borrowing requirements for whatever the loan is that you're applying for. In terms of rates, they can be fixed or variable. So again, knowing that those variable interest rates do fluctuate over the course of the loan term, they may start lower than a fixed rate, but certainly can rise over time. So when figuring all of this out, I think it's important to, again, read, compare, and whether you want to do the same process as when comparing colleges, a spreadsheet, so different companies, different student loan offers, interest rates, all of that good stuff so that you can review and compare and make the best choice for you. One thing that I will say just about the loan process in general, if you as the student or families listening to this, if your student does qualify for federal loans, those federal loans typically have a lower interest rate and a much more generous repayment option or repayment options, I should say. So if they are offered and you are going to need loans to fund, the rest of whatever the out-of-pocket expense is, those federal loans are often a good way to go first. But again, very individual decision to make. And just one last note actually on the federal student loans is you will see any federal loans that you qualify for on your financial aid award letter, but you're not required to accept them. So they will be there after having filled out the FAFSA, but you will have to let the college know whether or not you're accepting those federal loans. So you will see them there regardless. You need to make the college aware of whether you are accepting those federal loans or not. If you are, and there's still a remainder of a balance for that out-of-pocket expense, then of course you can consider these private loans that we just talked about, but you can also consider a college tuition payment plan. So we'll talk about that next. So payment plans are typically set up with the college's bursar's office or business office. There is typically an enrollment fee, and that varies from institution to institution. You can have a 3, 4, or 5 month interest-free payment plan. And the purpose is such that you don't have to pay the remaining, or the remainder, I should say, of that tuition bill at the beginning of the semester. So let's just say there was a remaining balance of $5,000 and you didn't want to pay that $5,000 at that initial due date before the semester starts. If you enroll in a payment plan, you can break that payment up into, as I said, 3, 4, or 5 months, depending on what the institution offers. I will say, though, that missed payments on one of these payment plans set up with an institution can amount to extra fees, not only on that first missed payment, so that initial missed payment, but also any payments moving forward. So another reminder just to look at fine print before you decide to opt into anything financial, whether it's a loan or one of these payment plans. So for that reason, it's really only a good idea if there's not a chance of missing a payment. So if it's, grasping at straws because you're not sure how you're going to come up with the tuition money, then a payment plan might not be the right step. And maybe that's a time to kind of step back and reassess the whole financial situation. But just know that there will always be fine print, whether it's loans or payment plans, and just to really dig in and get all of the information before you move forward or take any steps to that end. And really, I would just end with the comment that there's no right way, there's no right decision. What works for one family might not work for somebody else, and that's totally fine. In the end, you will need to make the best decision for you based on, of course, right fit with the college itself, and then how the financial piece works out for your family. And again, it's going to be a very different conversation with every student and every family, and a different right choice for every family. So again, I just caution everyone to take time so that you're not rushed into making any decision that you're not fully or for which you don't have all of the information. So get information, leave yourselves time to digest all of that information, compare the information. So kind of in the application process, but then certainly once you get those financial aid award packages, to really take time and hash all of that out. All right, I hope some of this information was helpful, and we'll see you next time.